All right, everyone. Once again, welcome to another Thursday night class, the 1st of August. So for the topic tonight, we're going to be talking about the mindset of patience. Now, key word in there, patience. When you have actual patience in the market, you're going to make money. And if you don't make money, patience keeps the losses slim. They keep them minimized. Everyone wants to make money. Not many people can keep that money. So I'm hoping to change the way you think, change the way you approach trading, maybe rush into stuff that you hope to make money, even though after selling for a loss, you may be thinking I should have waited longer. I could have got a better entry. Maybe even the fact of overall, this was a horrible situation to get into, and I'm feeling it now that I'm in the trade. So the first topic that I want to get into is basically waiting for a quality setup and not chasing the play. Many people, and I don't want to be like very direct saying every trader, but majority of new traders, when they come into the game of trading, they're so focused on chasing, they're so focused on rushing into positions. They just want to make money and not really worry about the after effects, or maybe even while they're in the trade, what they're going to have affecting them emotionally, mentally, before realizing it. So many people, and usually when I say so many people, I'm just referring back to where I was 3, 4 years ago, 5 years ago. I would enter a trade only thinking about, man, I could make X amount of money, not worried about, okay, is the setup even valid? How much money could I lose if this does not work out in my favor? Everything that I had to go through as a struggle turned out to teach me what it took to be successful. So with quality setups, I'm just going to type key terms in here. I don't want to type and talk too much. I really want to get to the visuals with you guys with chart ideas and just visually accepting what to do in the moment with things. So when waiting for quality setups, many people, they're just focused on the money, which is, it's fine. Everyone trades for the freedom, the financial status you can possibly have, get out of debt, pay off bills, extra income on the side, not understanding the fact of everything you do to make the money is a result of what you see on the chart every single day, day in and day out. So if you can't understand, if you can't really picture and have a good futuristic outlook of what could happen both ways, red and green on the trade, not just the idea of I'm going to make money or I'm going to lose money. What is the risk associated? So when thinking about quality setups, the proper way I like to look at the idea of this is, what's my risk? This is the only thing I think about before entering. Like even before I think, okay, I'm going to buy in with this amount of money, I'm going to size this much. The only thing I care about at this point in my trading career, what is my risk associated with this trade if it does not go in the direction I'm hoping it goes in? When I tell people this, it's like, well, what do you do if it goes green? When you're green on a trade, how upset do you really get when it goes to red? Or if you're green on the trade, you're up 50%, then it goes back down to 10%. The emotions start to go up if you're not trading the setup and more so just the financial result of that entry point. So when I break this down to people, calculate the risk, because you won't have any second guessing. You won't have any emotional thoughts, or even say you have a setup or a plan before entry. Once you get into that setup, you're not freaking out or changing the idea of what you want to do. You're going to stick to the plan. And in my personal opinion, when you follow a plan, you follow a setup, and you do take an L on that, it was managed, it was an actual calculated risk. I do not consider that a loss. As long as you follow the stop loss and you follow what you told yourself, you're not lying to yourself. I'm going to sell at 20% loss. That is my longest I will hold this red. You don't end up selling at 20%. You're down 40%. Now you're stressing. I'm going to get back to 20% down. I'll just sell there. Most traders, it's like, well, I'm going to wait and try and get back to break even. I don't want to sell for 20% loss. If you stick to a plan, a quality setup, not the idea of chasing, the idea of I missed out on this play, I have to get in before it's too late. Every L you take, you're going to learn from it. You're going to grow from it. And I consider that a successful trade, because you're going to grow and realize what you did wrong and improve that moving forward. Eventually, when you find every kink in the setups that don't work out, maybe you fall off track with your system, the only thing left is to earn money. And this is one little quote I love to talk about. So learn. You got to take You got to take an L. When you're learning, you take L's. And the best part about taking an L, take the L out of learn, that's when you start to earn. I tell people this, it's kind of a cheesy little thing, but to learn, you have to take L's. Once you take that L, you start to earn. That's all you have left. So going through proper setups, understanding the actual risk associated, you start to realize don't risk for pleasure of a financial result. A lot of people, even myself, every once in a while, I'm thinking to myself, I got to get in. Like, if this goes the way I think, like it's going to be so rewarding. This could be the trade. I'm not going to size as heavy. I'm just going to throw in a few $100 that I can like afford to lose. At that point, there's nothing to learn from that other than you're throwing in money. Don't do that again. So when I reach about and talk about don't risk money for pleasure, so many people, and you would not even like believe the feedback I get in a negative way, like their whole idea of trading is the rewarding feeling or like the successful, like I did it, I made money, this is amazing. That's the byproduct of everything we're doing. I understand money is what basically drives a lot of people. It pays the bills, it keeps them emotionally like stable. That's fine. But you have to realize what we do on a daily basis, we control everything. We buy in because of us. We sell because of us. We take a loss. That's because of us. That's why I personally love this journey of a career, because everything that I do falls back on one person, and that's who I see in the mirror every single day. And it falls back on the next thing. I need to have patience. I need to realize that the longer I wait for a proper setup, I won't be risking money for pleasure because I'm focused on the setup. Proper setups are always needed. My typing is not the best right now. Proper setups are always needed. Always, always. And the reason I say this, and a lot of people, it's like, well, show me how to find the setup. It's not really the idea of like finding a setup. It's what works for you. Do you trade with the EMAs? Do you trade with the VWAP? Do you use volume increase or decrease? Do you possibly use like an actual pattern breakout? What do you use to make money in the market successfully? Is there a system? Is it just you buy breakouts and whatever happens, happens? Are you learning from your setups that may not work? And are you also still learning when they do work in your favor? That's one of those things that a lot of people don't want to like look in the mirror and face, because if they're not enjoying what they're doing, they don't want to do it as much anymore. They're only focused on like, I want to make money. Show me how to make money. If I can show someone like, oh, this is how I make money, how are they going to deal with the fact of progressing and growing or keeping the money they just made? Anyone can make money in the market, but who can actually keep it? Who can grow it? Who can make it preserve in their account or bank account long term? So when you accept the process and not just the results, just think about how like growth affects that in that instant. The idea of process and not just the results. Entering a trade, understand it could go red, it can go back to green, but you're not focused on just the end result. You're prepared for my entry, the inside of it, whether it's up, down, and then you sell. You're planning for the process of that trade, and you're understanding I'm not going to win every trade. You're going to lose. Everyone loses. You have to manage that loss. And if you don't, I promise you, and this is not just me saying like this will happen, this is a promise I can say to anyone. If you don't manage risk, you are never going to make it in this game long term. Maybe a few days, few weeks, you're going to make money, but how are you going to keep it if you don't even understand the process of an entry to an exit? How to find it, how to manage it in between, how to keep your emotions off the table and only focus on the chart, let the levels speak to you. That's the biggest aspect I try and get into people's heads, because just trading, making money, oh, good day, I'll come back tomorrow. Trading, oh, I lost X amount, I'll try and get it back. Man, I lost again, I'll come back tomorrow. What are you learning if you're just living with the results? Like, you can't just repeat the same trade every time and expect it to work. The one time it doesn't, you have to realize, what is my stop? What is my actual loss amount? And of course, like a lot of people, and I keep saying a lot, but this is the majority of the people that I've tried to help in the past, when I only talk about the downside of trades, the red side of what could happen, so many people are just like, I don't care about losing. I want to make money. Okay, well, you do realize to make money and to keep growing the money, you have to limit the losses because they're going to happen. No one is 100% on every trade. I mean, there's people that hit maybe 50 times out of 55, but those 5 losses can easily outweigh those 50 wins if proper sizing is not calculated, if they don't sell when they're supposed to. Maybe all their wins are only like 5% gains so that the heavy losses outweigh all those wins. There's so much people don't talk about when they get success because they're only focused on, let me show how much I made. And frame this in your trading station. The market is a money transferring system from the impatient to the patient. Miguel, that's perfect. The market is a money transferring system from the impatient to the patient. And Lady Sneak said, type it in, y'all, what works best for you. Everyone that's listening right now, if you're able to, type in the chat what you use. What is your go-to? What's your quote unquote secret? What makes you a successful trader, or at least what makes sense to you? Even if it doesn't work, what do you use when you trade? Is it volume? Is it EMAs? Is it higher lows, the trends, patterns, breakouts? If you guys want, like, you can type this. As you do that, I'm going to switch over to the charts and I'll slowly build off visuals outside of just the idea of how to make money. I feel like not many of you are going to be typing things up. Pull up my trading view. There we go. There's a few of you guys typing in now. Don't be scared to talk, you guys. Like, if you're here just to listen, that's totally fine. But I really hope you realize everyone that's in here wants to learn. Everyone in here is probably maybe even not as far as you that you think. So many people I've tried to help. It's like, I'm not as far as other people. I don't want to put my input out there because they may make fun of me. I used to be like, I had no idea what the market was. I had no idea there was even like what's the economy? Like, what are you talking about? Like, you can buy stocks of Apple. What do you mean by this? I didn't know anything years ago. And when I say anything, I literally mean I did not know like 0% of what any of this is right now. So if you feel like you're lost, this is why you're here. Like, don't be scared to be interactive. Ask other people in the chat questions if they said something that you're like, how do you use this? Like, what makes you want to do this? Don't be scared to talk, you guys. Even amongst each other, I'll answer any questions as well. I'm going to pull up the QQQ real quick. And after this, I'll take some recommendations from you guys with chart setups, and I'll show you exactly what I personally would wait for when looking for proper setups with a system, or just any type of like, this is why I would wait, and this is why, like with an explanation. I want to give you guys as much direct one-on-one help as possible, and not just why I do stuff, because not many people understand the type of trader I am, if that makes sense. So I'm going to go through and read what you guys said real quick. So we got levels in volume, volume in PA. We got chart levels, but my entries for some reason always go wrong. Donnie, don't worry. Hopefully the rest of this is going to help you. I mainly use EMAs, different ones depending on time frame, supply and demand, and volume. Levels totally, VWAP, levels in learning, more and more PA. I won't trade a stock if it doesn't have a technical / news catalyst. RVOL 3+ AR ATR for range liquidity. Raul, you got, that's good. That's good. VWAP's being mentioned a few times. Trend line, support, resistance, patterns, SPY for direction, volume, catalyst, sympathy play, and tape. TTM squeeze. I used to use that. I still watch that often. Hassan actually taught people that. Volume, VWAP, trend lines. Okay, so trend lines, VWAP. Volume is the biggest one. Obviously, you guys know volume's needed. Okay, so we're going to look at the QQQ. So I'm going to break down to you guys on the bigger picture first, what I saw, and it worked out, which is why I'm a little bit, I don't want to say upset. I'm not mad it didn't work. I trimmed because when I usually tell people, like, this is my stop loss, I stick to my word as much as I can. Not many traders tell you what they're going to do and actually do it. So I'm always trying to be transparent. I'm always trying to be honest with you guys, because if I can't be honest with you, why do you think I'd be honest with myself? and vice versa. If I'm not honest with myself, why and or how would I be honest to other people? So I'm always trying to live up to what I type out to you guys and say. So looking at this setup, let me zoom out just a little bit first. So the biggest thing on the QQ from what I was watching, we had a bounce, which was basically what I was waiting for the entire month of July after we broke out of this double top, which was roughly $371.30 a share, around that area, 371.5 area. Focusing on the bigger picture, I knew if we had a pullback, the bounce would be roughly around that double top area, which happened to be today. We didn't go down as far as I figured, but as we pushed up, that's when if I missed the call entry on the bottom of the resistance to support flip, and I'll put some, where my drawings at? All the way down. So if I put in some levels, some highlights, I'll put some text in as well, just so it's more visual for you guys. So we had a double top resistance. Let me make this big. There we go. So we had this double top resistance historically. And as I always tell you guys, the biggest thing that I love to trade, not because it's my strategy, but because when I do this, my risk to reward is always in my favor. The risk is so minimal, the reward is always going to be more because of the probability of either a breakout or it holds a specific level and it pushes. So every time I see a heavy resistance, we finally break out, I'm waiting for that pullback to a support zone. If I miss the support, I'm looking to see what the next level of resistance on the chart is, whether it's a push upside, it has a rejection, or once it breaks up really high and has pullbacks, I'm looking for a new support forming based off the previous. So I'm going to put a level around where my cut was that I alerted in the Discord, which was roughly 375.5 area. I'm not going to get this dead on, so I'm going to put it at 375.53. So when we had that drop off, and now that you guys see the bigger picture, that was my rejection. The 375.5 going off the historical support. It would wick underneath a few times, but I was using the overall filled candles and not just the wicks. I would have had this down a lot lower. It wouldn't give the stock room for a possible push. And I even could have brought this up a little bit more, looking back at the trade recap that I did after close today. But I wanted to focus on, I'm going to move this highlight down a bit. I was looking at the wicks that were touching and the few filled candles with the wicks on this day as a whole, which was July 26th. That was a major level outside of the wicks that came down, liquidity grabs on the fake out of the support break just to push back up. So I had my level roughly around that 375.5 area. Keeping it there. And now that you guys understand why that was my stop in case we did break this historical support, which flipped to a now resistance, going down to the 1 minute time frame. And I'm on the 1 minute just so you guys can see it from a better perspective. I personally keep it on the 5 and the 15. So looking at this, we bounced off the support that I was watching, double bottom off open dip, pushed up heavy, pulled back for a double bottom. I missed my entry on calls around 10:30 Eastern this morning. So when I miss the calls, I don't chase this on the way up. My entry that I want is as good as possible. If I miss the entry, I don't chase it on a pullback. I want a triple bottom. I want the lowest risk, because if we break this double bottom on the day when I'm in calls, I'm basically selling right away for a loss and just readjusting as the stock is moving. That's my patience. Since I missed, and I'm going to take away this highlight, since I missed this double bottom right here, and I'll put more words in here. So I missed this double bottom. I'm not chasing this as it moves to the upside. I'm not going to buy calls because, oh, I missed it, I got to get in before it's too late. I'm not picking it up on this pullback, even though looking at the support, that would have been a fine entry. But when I'm focused on, I want to enter down at this double bottom, this is a risk for me because my cut level at this red highlight above right here, my cut is the low on the day. Focusing on risk to reward, trying to see if I can figure out how to do this. There we go. So looking at risk to reward, we're looking at the high of the day at the time. And that's going to be The risk is a break. Well, the reward, I should say, because we're looking at calls. I don't know if I can flip this. No, I can't. So when I enter, with the green being the risk, I don't know how to switch these to red to green. If someone knows how, you can type in the chat real quick.
Yeah, Breezy, quickly. The I can show you how to switch it. Where you first clicked on it, I don't use TradingView a lot. The one that you pulled up for the risk to thing, it should be showing long position to short position. So it's gonna be one of those.
Oh, so long as the other one then. Yep. Okay, perfect, bro. I appreciate you. Okay, so going off, entering calls at this possible area. I'm going to change this highlight because we're going to blend in. Let's go pinkish. No, let's just go white. We'll keep it white. So going off this white highlight on top, I'm going to take double bottom highlight away just so it's more clear when I explain this. If I enter calls on this possible recontest, my risk is a low on the day break. My reward, going off of this, there's a lot of resistance along the way. We have a resistance here. We have a resistance above it high today. I don't like the idea that if we don't break out of this resistance that's heavy, obviously looking at what happened, forget about that. Focus on what you see right now. When we see a setup like this, the risk to reward going off price action is not worth an entry when I wanted it at the bottom. So I'm basically risking, if I would have got in at this white highlight for like the second chance on calls, patience is there, the setup's valid, but I'm focused on the bigger picture of this setup, not even focusing on, like most people, they just want to get in, not even think about the possible risk to reward. The downside with an entry is roughly a 0.85 drop per share. The upside is only 0.9, which is basically a 1-to-1. And like you guys are saying, low on the day. If that broke low on the day, that's where I'm cutting. There's no reason to cut a call until low on the day breaks because that's when the weakness is showing. Until this breaks at the bottom, we're still looking bullish for a bounce off this historical level, which I showed you guys on the 30-minute. So I did not think about calls. At this point, I'm focused on, okay, my put rejection's coming up, going off the bigger picture. So as we're starting to curl here at high of the day, I'm looking to enter puts at some point. At the time, we did not break out. I entered roughly around, and I want to say one of these candles at the current high that was happening. So as we're pulling back, I'm entering on the pullback using the major time frame, which if I put a level dead on right here, and I'm going to zoom back out for you guys just to see this one more time. So when I go back to the 30-minute, the level I just put in was around this 374.8 area. I was using not the actual stop loss because I don't want to enter where my stop loss is. If I would have waited that long, the chance of it pushing up maybe wouldn't have happened. So I was calculating based off the wicks where I was going to sell. And that was being around this area. So my entry point was around with this, let's change this color to blue, this blue level. So when I entered this, my risk is already calculated. And at the time, the risk was not a lot. Like it happened super quick when the breakout happened. It took not even 8 minutes after the break above my entry point. Using the risk to reward at this point for what I was focused on with the chart. I'm going to pull that color situation back up. So I'm looking at puts at this point. So I'm looking at the short position, entry being here. Risk was literally about 0.6 a share upside. Reward was high on the, low on the day contest. Obviously, we have support bounces that could have happened, but my target was basically a low on the day recontest. If you don't want to talk about low on the day because, like, quote unquote, that move is too much, let's just focus on the resistance after where I could have gotten calls the first time or the second time where this yellow highlight is. So we had this resistance, and this was like my, if I get calls at this yellow highlight, this is going to be a rejection. My low on the day is the risk if I get calls. So like, it's not a good risk to reward. Going off just this right here, we're looking at a 1-to-2. My risk was basically a 0.6 push on the upside, which hit higher, obviously, just barely, and then it pulled right back down. My reward going off the next heaviest support possibly was about a 1.2 drop per share on the QQ. So a 1-to-2 risk to reward. Using setups like this for me, for every 2 trades I lose, but I have one winning trade, I'm still neutral overall. I'm break even at least. If I wanted to follow this stop loss and say it kept going higher, and I'm still holding, that's how you expand that risk to reward to make it so like you're never going to be profitable long term. If you have a RR of 1-to-1, or even for some people, they sell for a loss of 20%, but they take gains at 10%. What are you doing with growth looking forward? Like, what are you learning? What are you really comprehending when you don't understand what a risk is and your reward is so small? I've had so many people like reach out to me, like, I just can't hold trades that are green. I always sell so small, and then all my losses, they just go insane. They go 50% loss. I take gains for 20%. I don't know what I'm doing wrong. First thing I always ask everyone, are you sticking to your risk? What is your risk before you enter a trade? And when the people respond, or whoever it is, well, I don't really have a risk in mind. I'm just entering to see what happens. Like, what are you learning when that goes against you? As a trader, our job is to calculate the risk, the reward, and then the RR, which risk to reward, obviously. You need odds in your favor as a trader. We are not going to win as retail if we have a 1-to-1 risk long term. Like, if your hit rate is 70% plus, anything above 50%, you'll slowly make money. But like I was telling you guys earlier, if you have a risk, like for every 3 trades you lose, 1 trade you win, you're break even. Imagine having 4 wins, but 1 loss puts you at break even because you can't cut a loss like when you should. That's why when I play stuff, I only focus on the price action on the stock. I'm not worried about, oh, I'm down X amount %, I have to get out. So when I get into trades, going off the chart, what can I like risk based off PA, the price action? If I know the reward, what am I really putting myself in a situation to freak out over if I have everything predetermined, whether it's on paper with like writing, like this is my risk, this is my reward based off the chart. For me personally, when I look for a risk based off the price action of a stock, I'm always trying to look at the contract chart. I mirror the two. So I have the option contract chart and the actual stock chart. Where will the contract be value wise for the risk I'm putting myself in? So I try and have like a rough estimate of how much I'm risking per contract before I buy into this position. Because that way, when I enter this position, and I'll type this all out for you guys that don't know, entry was 1.3 a contract. My risk was a 1.00 sell. So I'm risking $30 a contract. That being the risk to reward, well, the risk, the reward I'm not really worried about. The idea, and like Donnie said, what was your mentality with QQQ starting going down after you were out of their stop loss? So like usually when I get stopped out of a trade, I watch it to learn. I don't watch it because, man, imagine if I was still in. Because then if you focus on what if I didn't get out? Like I trimmed majority of my position. I still left the runner. I didn't want to sell the entire position because every time I sell for a loss or my stop loss hits, it usually pulls back. So if I size, let's say 4 contracts and my stop loss is in the motion, I'll sell 3 contracts. I'll leave 1 contract to work its way out because technically the situation is still valid. If I switch to the 15-minute, which I'm not going to do right now, these candles didn't hold above my level. The 5-minute, they closed above. That's why I got out of it. So knowing my risk was only $30 a contract, say my risk is usually $300 a position. So if you size $1,000, you have to sell the whole position because that's your risk. A 1.3 entry being $130 a contract, your risk is $100. You're risking $30 per contract. So if your risk overall for the position, like you have to sell if you're down this much, say you only size $300 into this position. When you size only 300, you can hold this long. And for me, I sized light enough. I took off like contracts in case it did keep running, but I left 1 just in case it had a pullback because I wanted to swing based off the earnings. I felt like Apple and Amazon may not do very good. Obviously, Amazon went up, Apple came down, but Apple's reaction is what kind of took QQ from not having that breakout following what the Amazon chart did. Could we send tomorrow? Yes, we can. But having that only 1 contract, I can lose that whole position and I'm not going to like be worried about it because I calculated the risk. when I'm only in one contract being $130, hypothetically, if my risk is $300, that's just over 30% of what I usually am like able to lose and not be upset. So after I sold, going off of what Donnie said, I was not focused on re-entering because I got in where I thought it was supposed to work. I'm not trying to like, uh, what's the right word? When I'm in a trade that does not work out and I have to follow my risk, I don't sell because, oh, I'm down this amount. My level on the chart broke. I have to get out. I don't try and make it back or like, oh, I'm going to get this play back. I'm not going to sell and just let it go like in the direction I need when I'm not in it. I don't care about revenge, whether it's trading in real life with people, whatever the chart does, it is what it is. Whatever people do, it is what it is. I'm focused on the next possible setup, the next possible trade that I can get into. That's the mindset I always have. And if you're that conscious of like, man, I wish I was still in, leave one contract if you can afford it. If you can't afford to put a contract in or leave it after the risk is hit, you either need to size less or you have to follow the plan. Like, trust me, the mindset of trading is the only thing that holds people back from being profitable. It's not a setup. It's not a system they follow. It's literally they can't sell for a loss when they know they should. Or they sell for green. It keeps going green, green. The next trade you take, you don't want to sell when you should because, oh, last time I had a trade, it ended up going 100%. I don't want to sell because what if I miss it? And the next thing you know, you don't sell it at 50% gains. It goes back to red. You're down your actual risk of 20%. You don't want to sell. You have to follow the system. Because the minute you lie to yourself, you're not going to be disciplined. And that's when everything falls apart. I mean, I see one of you guys in here that you journal every day in the Discord. I read it every day. Every day I'm waiting for that journal because your discipline's going to get you where you know you can be. So many people in here, they win. They don't want to look over what they did. It's just like, I made money. Amazing. I'll come back tomorrow. You have to document everything. If you really want this to work, you're going to put the time in. If you're just here to make money, it's more than likely not going to happen. And I hate saying that because I believe in everybody. But end of the day, trading is literally you against you. No one's holding you back from selling a position when you said you should for loss. And the biggest thing I like to say, no one is making you sell for a quote unquote small gain and it keeps you running. You have to take those base hits. Until you can afford to leave runners, you have to take those small losses. So going back off of my entry, after I got stopped out, the contract literally went to 0.99 at the low on the day. Did that well, like until the end of the day, just push after hours, whatever. But in the moment when my stop loss hit, it literally got me wicked out by 0.01. If I would have had the stop loss, let's say at 0.95, I'd still would have been in the trade. After this drop off happened and it filled what I was looking at, this contract went to 1.7. If it would have had a reject when I first got in, a pullback here would have been more expensive. But since the time decay, the IV as the chop happened, the pullback wasn't as rewarding as what it would have been when I first entered the position. So just going off, and this is when I like to get deeper into when I journal, where was the trade at when I was red? Where was it at the high when it went green? What was the risk to reward when I was in the trade? It's not just when I was watching it beforehand. This is my risk. This is my reward. I love hearing about people's positions, how they move when they're in. So going off the risk to reward of the sell at $1, entry at 1.3, the contract went to 1.7 area. So when it did that, the risk to reward obviously was barely above a 1-to-1, but that's enough if you can actually accept the fact I have to sell. Many people have to understand, let's say 9 out of 10 trades that you take, at a maximum amount, they go at least 20% every time. Imagine selling every of those 9 trades at 20%. A few of them may go 50, a few of them may go 100%, but realize one trade's going red if you just took those base hits of 20% every time. That's a huge, huge account building. Mindset wise, it tends to tear some people apart. Selling at 20%, it goes to 100%. You wish you would have held longer. You're wishing for things that you were not prepared for. You're looking at the result and not focused on. You would have had to have held being up 30%, and then you're back only up 10%. and then the contract goes back to 80% gains, then it pulls back to only 50%. No one's focused on the journey from the buy to the sell. It's just, I should have held, I could have sold for 100%. Not realizing like fluctuation happens. Can you handle that emotionally? Can you let your mindset tell you the chart is holding, do not sell? If you don't have time on a contract, you can't just follow the chart, because any chop, like what Q did right here, if you had 0 DTE on Q at this point in the day, this chop would have destroyed your premium and you probably would have sold for a loss, and then boom, it tanks for the puts. That's the hardest part about not playing time on contracts, because people don't understand you have to hold through up, down, up, down. So many people, they'll sell and they say, man, if I would have held it, I would have made 400%, not realizing it was up 200%, and then it was only up 20%, then it's back up 300%. Imagine holding through all of that when you're watching this, like right in front of you. A lot of people leave runners, they walk away, they don't know what's going on. But if you're sitting here watching, like your P&L especially, you're up 100%, and then you're down 10%, you're back up 50%. That unstable mindset will literally destroy you. So that's why you have to follow the chart. You have to sell for those small wins. 20% is not small. You have to realize that. But if you're taking these 20% wins, you can't let those trades, oh, it would have went 50, I'll hold next time a little longer. I promise you it's not worth it if you focus on like compound growth of your account. Think about a year from now, 9 out of 10 trades, you hit at least 20% during those 9 trades. Why would you not take profit if you're journaling that and you look back, man, out of the last 100 trades that I've taken, 85 of those, they literally went at least 20%. If I would have sold all of those at least 20% and then cut those 15 losses at least 10, 20% loss, just think about that. 15 losses at 20% loss, 85 wins at 20% win. You made 65 trades, 20% growth. Just like process that. I know some of you in here, you've had at least a chance to sell 20%. You don't do it, then you sell for a loss. Or maybe you sell for, let's say 35%, it goes to 50. The next trade you take, you don't sell even at 20% or even 30, maybe even not even at 50%. You have to grow the account to the point you can lead runners for that adrenaline rush, for that hope of, man, I just want to see 100% gains. Don't leave a whole position for that kind of circumstance. And I get, like, I'm saying this from my heart, from my past. I would hold because I just wanted to see the P&L of a percent. It wasn't the fact of like, oh, the chart's holding, I have to keep this position in my possession. Not realizing, like, if you're in a Q position, I'm going to take away this green and red. Say you entered puts to the top. When this pulls back, you better believe there's going to be some buying pressure when this hits again right here. Because look where it was before. When it pulled up, this is where I entered my calls thinking, like, if we break through this level, we should slowly come down the low on the day. When this level recontests, historically it acted as a support, pushes higher. When that pulls back down, there's going to be buyers present when this level hits again. What are you holding, hoping for if you're just looking at the chart? Like, you know, okay, there should be a bounce here. If there is a little bounce, I'm just going to sell and be happy. But no, people want to look at the P&L. Man, I'm up 65%. Let's see if I can at least get it to 80% first. And then we have a slight pushback to the upside. Now you're only up 50%. Then you're up 40%. Then it pulls back slightly. Now you're back up 60%. Like, just think about how many times you've been in that situation and you're just sitting here thinking, I really should get out, but I just want to wait and see if we can break this level. This level I have highlighted, if you only have one contract and you're still holding, you better sell this contract. If you have 2, 3, or 4, maybe sell all but one contract. If you have 10 contracts, sell all but maybe 2. That's where the risk, understanding, trimming, letting the runners do the work for you, that's when you let those take yourself into effect. Because until then, if you're only able to size one contract, you have to sell. I'd even say before that bounce at the bottom, you should be selling 20, 30%, because that's all you need. You have to grow the account before you can afford the size in heavy. And if you are ever in a position, you waited for the best setup possible, you oversize because you know my risk is very small and the reward on the chart is a lot bigger. So say you get calls around this area on top and you're oversized. Don't hold for the big move because you're finally in a position where you sized in heavy. This could be the breakout moment. Trim along the way. And eventually when you get to your normal sizing, leave that normal sizing that you should have went to in the beginning as your runners. Stop loss at break even. Let the chart do the work now. If the stop loss gets hit, like I talked about in the last class, you don't get upset about that. You set the stop loss because you were content with the result of that. You understood if this stop loss hits, I'm not upset because mentally I chose to do this and I'm going to stand by whatever happens with the chart giving me the result. You don't control what happens. All we do is play the chart. We play probability, whatever the chart presents, whatever the algos give us, we live with that result. Win or lose, we have to live with it. Do you guys have any questions, any stocks you want me to look at to break down for you guys? Anything at all? Going through looking to see if you got. Yeah, go ahead. Oh, hang on. Give me 1 second, bro. All right, go ahead. You're good now.
Yeah, sorry, all good. You're good. Can you quickly look at Google? I feel like it's on the weekly setting up a potential 3-bar play and lowering volume. I wonder if you potentially see something that I see as well, or just to confirm it.
Yeah, I got you. I'm not gonna be charting these based off ideas. I'm gonna be doing it based off the topic, but I'll try and incorporate what you just asked about it. So don't worry. I'll do my best. Let me just saw this. Okay. So we talked about this past week, actually. So yeah, if we're going off Google right now, this is kind of the same setup that QQ had with the pullback to a support area that was a historical rejection, now acting as a support. So it's trying to bounce right now. I'm gonna put a level at this top area just so we have an idea. When putting a level here, I got so much crap going on. Looking at this the yellow horizontal, when I'm focused on this on the 2-hour right now, I'm not trying to like choose the top wick. I'm looking at the biggest overall price action, momentum, correlation with full body candles, or just overall area. You can either put it at the top of these 2 wicks right here, the red wick on top, and then this green one off open, or the 2 fill candles below. Anywhere in this area, I would recommend putting a level, not up on these price action. You want to give the stock room to pull back to where more candles showed correlation to the chart and the price action. So using that and going to the current time frame, we can see we tried to hold off that level. And let me switch the daily with what Chris said real quick. Yeah. So at this point, like what he's saying, we have a rounded top. We could possibly, it's too soon to tell because we only have 2 daily candles right now. We could form a support and start to kind of round back up to the top side. So looking at, and you said the weekly, let me switch to the weekly real quick. Yeah, so we pull back right to that support level on the weekly time frame. So knowing that on the weekly, obviously going to the 15 to 30, we know that we bounced so far this week off that level. And just like you said, the 3-bar play. So switching this to the smaller time frame, just to show you guys more of like patience with an entry, patience to see what the chart does. At this point, what I personally would be looking for, and this is a setup you guys have probably heard me talk about multiple times, when looking at historical rejection, now trying to act as support, I'm focused on a possible trend reversal. Patience-wise, I have to comprehend I can't risk buying calls too soon, even though this could be a good entry. We could keep pushing higher. If we pull back, we have a nice support level slightly underneath, which also correlates. I'm going to switch to the 5 minutes so you guys can see this a little bit better. Historical support that acted as a rejection on Wednesday. I don't know if you guys see that or not. Support back here, then we tried to reject and pull back. Once we held this support around 127.5 area, now we're trying to make that momentum push back into a bullish trend of higher lows and higher highs. So if we can keep the trends going, what I would like to see from my type of patience waiting for a proper entry, I would like to see a pullback to this white highlight area. which would contest this support back on July 26th, and then using this rejection, which should flip to support now on a pullback right here. So I'm letting the chart give me the entry point. If that's how I personally would trade Google, this is what I would do. Obviously, you guys could see something different, but I like to have confirmation. I don't like to enter with the hopes of this has to keep going up. I want the best possible entry, maybe add time to the position, but this is the type of setup that I love, a possible curl right back to the highs. Price target for me, looking at the bigger picture, I would look to enter calls. So I put my risk being a break underneath of 127.5, a break and hold underneath. My risk for a long-term position on this would be a double top back to the resistance that pulled back. So my risk is roughly $1.50 drop per share compared to a $4.50 push to the upside. If you add time into position, this could chop a lot and not just full send to the upside. So maybe not just a week or two of time, maybe a month. But this is how I usually calculate my swings, going off of zones and letting that be my sell and or entry points. And Mr. Trade said on 130 hold above, swing 2 or 3 week expiration, stop loss below it personally. So break it up to 130, which would be this level right here off open from Wednesday. So the way I like to, and that's perfectly fine, if we break above 130, if we don't pull back, what I like to do, we break 130 on the upside, catch the pullback to the downside. So if we break above, I'll catch calls when we recontest and show strength to hold that position off the resistance to support flip. If we do pull back, this is where I'd be looking to enter around the 128.7 area based off heavy support after their earnings. And then once we broke below that historical support, we tried to reject it as a resistance. Now we're back above that. So my two scenarios that I look for, I'm going to get my other little arrow to pull back to this support and take off from there. We could reject 130, pull back slightly and keep those trends of higher lows, or I focus on a break of 130, pull back to support. Because as long as these trends keep making higher lows, healthy pullbacks are fine along the way. That's why I like to wait for that perfect entry of a possible 128.7 area as an entry point. But if we break 130, you can play the breakout or wait for a break and a recontest. Majority of the time, not always. Usually when heavy zones do break, they recontest. Not every time, but that's the risk and the patience you put into play to make odds better in your favor. Someone said Apple, Amazon, DraftKings, Tesla. I'm going to do Tesla because the other three just had earnings. So price action is kind of invalid right now, but we can definitely go over those three for the charting on Saturday. So let me pull up Tesla, and this will be the last one. Then I'll take any questions along the way. One thing that I personally try and avoid, I hate charting stocks that have earnings. I like to see a day or two of movement, or if there's like a heavy push from earnings and then it sells off massive back to a support zone, or if an earnings sells off heavy, it's at a main support that was a historical resistance, then I'll play a bounce. But usually like with Amazon right now, it's kind of in no man's lane after that push. I did have a rejection around 140, so we're currently there. But kind of like with Apple, it's in an area where it kind of broke the higher lows off trends for the 4 hour and the 2 hour. So it's kind of, for me, like a wait and see what happens. So looking at Tesla, I'm going to start on the 2 hour just to see where it's currently sitting. We can still use the same levels that we have right now. And at the moment, using this 261.7 area that I have going historically and also in the current time frames for support and resistance, I'm going to take this down to the 30-minute. We could reject and keep going in this zone. After this double bottom we had, I'm going to move the 256 level I have slightly down to basically go with, I'm going to use the arrow again, this support, and then once we broke underneath, notice how we tried to hold as resistance underneath that level. So we know around 255 a share, it should have price action respect. Whether it's support or resistance, whichever way price action goes to that level, it should play into effect. If we have a rejection at 261, we could have that pullback on Tesla. This is my low risk entry for calls at the bottom here before the next leg up, keeping the trends moving. with higher lows in the moment. So personally, my patience wait to get into this with low risk, high reward will be a pullback to 255 area. If we break above that 261, and Chris just said, yeah. So I'll go to the bigger picture and I'll show them that, 'cause I know exactly what you're talking about. Looking at a break above 261, I would wait for a pullback to that level to show strength. And obviously, as we push upside, we're going to have resistance on Tesla around this area. So it's always good to understand where possible rejections will happen and not just focus on, I got to make money. I have to make money. So I'm going to go back to the 2 hour to show you guys what Chris is talking about. Because you're looking at the liquidity grab that happened earlier around this area. If we fill that gap, I highly recommend you guys go long on Tesla. Highly, highly recommend. The reasoning behind that, I can go back slightly more just to fill in this highlight right there. This zone has rejected, then it held the support. If we pull back another time, this level is like the make or break for Tesla, like what Chris is talking about. If we hold levels on the smaller time frame, you guys know what I'm looking at, but on the bigger picture, if Tesla does have this pullback to 240, that is a massive level before more downside if that does not hold. And of course, going back to the smaller, this would be the setup that I personally would look for less time on the contract, letting the levels respect each other, playing off the levels, and letting the chart give you your entry point. Do you guys have any questions real quick? Any topic you want me to speak on? Anything at all? If not, 3,700, I see the stock you put in, so I'll look at that. I just want to see if there's any questions since we do have a few minutes still. Tomorrow earnings for PLTR and AI. Yeah, we can look at PLTR. I know it's been breaking out. I'm not sure if it had a pullback recently, but we can see what the risk to reward would be. Not many of you are typing questions, so I assume you're good. Oh, just PLTR tomorrow, not AI. I'm only going to look at PLTR. I'll give one more breakdown for how I personally like to wait for low risk, high reward. I'll pull this up right now. Are you guys that are like, maybe you guys are in here just listening, not even seeing what I'm showing on my screen? Is anything that I'm saying confusing? Is it clear? Like, if you could just say, I understand, I don't understand. This concept of what patience really is, of letting a chart do the work, it's very hard to follow. A level shows support that you know you should enter calls on, but you're hesitant to enter right away. Chris just said August 7th for earnings, PLTR. Someone fact check. Chris has been pretty accurate with stuff. So looking at PLTR, you guys are saying up you're good. We're currently at, come on. I'm going to put 2 levels here just to show you this zone that we're currently at. We've chopped here multiple times. And that's currently where we're sort of sitting at, understanding, okay, chart action. What could happen with PLTR? We've ran already. A lot of stocks that run into earnings could be a situation because was it a pre-earnings run up? Is this like a natural occurrence that could move it even higher? PLTR at the moment, it's sitting in a very awkward area from how I like to look at stuff. So looking at it from a risk to reward based off price action of the stock, the PA, understand that for call side, if we break above this area, which is roughly around $20 a share, the upside is a possible resistance of $1 push on the smaller picture. The larger picture, there could be more obviously, but just looking at what you see on my screen right now, $1 upside is a possible reward that could reject. The downside for the main support, which I'm hoping you guys are slowly catching on to how I basically find my levels, is going to be around this area. Until we break underneath $16.50, this is still going to be a bullish setup only because, and this is when I like to look at higher lows, this trend is still holding. So until we break the previous higher low off this trend, that's when we're actually going to be bearish. So looking at risk to reward for calls right now, if I pull up going calls, The risk for a possible rejection is about $1.20 upside. But the reward for the upside is 1.2. The risk until a bearish setup is hit, if you want to use the trend line, you can put it around right here. But I'm focused on this move. Big move. This must be up here. The risk is going to be about $2.50 to the downside based off price action. If the trend holds, it will be roughly $1.20. Focused on the upside, it's about $1.20. So the risk to reward going off the trend line, also the $17.80, it's a risk reward of 1 to 1. Is that really going to be worth that entry point? Could you find a better setup from another chart? Could you find a better entry point? That's the biggest thing I try and like get people to understand is the price action, not just, man, if this stock keeps pushing, I can make a lot of money. We have a resistance, aka the high at the moment in this time frame, being roughly around $20 a share. The risk going off the trend, same pullback. So it's a 1 to 1 risk. If you go off the actual break on the bearish trends, risk to reward is 2 to 1, which is not very good. It's super good. Just learning it work right now. Everything makes a lot of sense for the most examples. I'm that person. Thank you for your time explaining. I used to be the same person. Sometimes I still am. So don't think I'm past all this. It happens to everyone. Everyone chases, everyone enters a trade they know they shouldn't, but they get into it. So I'm gonna